All right, I found my board as usual. So let's talk a little bit about Instacart. By the way, that's the new logo. Remember how this kept changing? This was a carrot. Now it's a arrow to a bump. And still the carrot. There used to be the Instacart carrot. They've changed their logo like 3 or 4 times. But as they found a new logo, have they found profitability? Have they found a way to get through the IPO? Let's find out. So as usual, I'm going to take you through a couple quick things and I'm going to analyze the point at hand. This is not going to be exhaustive deep dive. We're going to do that together as we see articles come out on this, but this is what I found very quickly, and I probably go deeper than most people do, so for some of you this may be pretty deep. So we start out with Valuetainment, and he was one of the 3 founders. He had 2 guys that were also founders with him back, I think, 2010, 2012 in San Francisco. He would be CEO for a good while until the board finally, they're trying to figure out how to go forward. They want an ad strategy. They got some things going on. And they had a woman on the board, Fidji Simo. And she used to work at Facebook, and she was responsible for the Facebook app, and she worked directly for Mark Zuckerberg. Hey, that's not a bad person to have on the board. It's also not a bad person to have if you've decided that the founder CEO, one of the co-founders who was the CEO, maybe it's time for him to transition to the board, be more of an executive chairman. Maybe look at other things. Maybe Instacart was growing up and there is opportunity to do that. Well, that appears to be what the decision was made. So let's go take a look at the history and how that played off. Again, founded in 2012 by Apurva and by Max Mullen and Brandon Leonardo. They're in San Francisco delivering groceries for a fee. Then they raised a bunch of money. There's a lot of that going on. I won't go through the series A, B, C, D, E, F, which is what it was up to this point, but I'll point something out. Is they had trouble with the gig economy. The gig economy is where, like Uber drivers and Lyft drivers, remember they were trying to sue in California saying, excuse me, hey, we're W-2 employees. We're not 1099s. You're controlling a lot of it, so you should be paying taxes on us so that we don't have to pay the self-employment tax. That tax can be paid for you. And while you're at it, maybe some basic benefits or access to lower cost healthcare. Again, there's this big war that goes on when 1099s decide they want to be out there and they want to be W-2s. Well, nonetheless, Instacart found itself in the middle of that. And they had to make a settlement, and there is a lot that went back and forth on that. It would raise its ugly head a couple years later. Then they filed an S-1, believe it or not, in August of 2019. They had raised $1.9 billion to date. Now, obviously, that didn't go out because they were heading right into COVID. There's a lot of other things. There's a joke about Instacart that says the only thing that's older than the company is its attempt to go public. There's been a lot going on there. Then, here it is, 2020, employees unionize in Illinois, and I think it was Skokie, Illinois. And there was also some layoffs later that had to do, and everybody that was laid off included a bunch of people that had attempted to unionize. So there was a little bit of a drama there. So Instacart's had its issue with unionization, the gig economy, and things that go along with that drama. Then in 2021, the board was like, we're just about, remember 2021, we're trying to bounce out of COVID. We're all struggling. 2022, we would get out, and Fidji becomes CEO and then chairman a short time later in 22, and they announced that one of those co-founders, Apurva Mehta, was not going to stay with the company, that as soon as they're gone public, that he would be leaving for good. And he put out a nice statement, appeared to be cooperative with that, but it all indicated there was some drama and leadership behind the scenes, which I don't think is too unusual. After all, they had gone nearly 10 years, grown significantly, and had their issues. They had the issues with the 1099 W-2, and also right down here, take a look at this. In May of 22, they disclosed that they had sent a draft registration statement out to the SEC.gov, once again, getting ready to refile the S-1 and go public. And in March, they had noted, yeah, we raised some money, rejiggered some things, and our valuation has gone 24 billion from a high of 39 billion. Whoa, wait a minute. So you were a big unicorn at 39 billion, but now the valuation dropped all the way to 24. So there are some things going on behind the scenes. This is not a company, you know, on a rocket sled to Mars, just going. This is a company that's got some drama there with the co-founder, CEO, some drama there with W-2 1099, and then apparently some drama on how they were doing underneath, below the surface, and what that was doing to the valuation, and coming out of COVID when valuations were crazy. So this was kind of a surprise there as well. Then in 2023, just a week ago, they filed the S1 and they announced that they had raised another $1 billion. And by the way, everybody knew this, but they put it all together. It was about $1 billion that had been raised between 2019 and 2022, bringing the grand total they've raised almost $2.9 billion. So just under $3 billion has been raised. So that's a quick history. There's a bunch of other things in there about sub-products, little things, buying a company. But nonetheless, this is the fortunes of Instacart. So now they come out and they said, we're going public. But here's something interesting to take a look at. There's a lot of interest in this. Even though, as I'm going to show you, I think that there's some headwinds and maybe there's some warts on this frog. You've got Goldman saying, we're going to go out with JP Morgan. By the way, it's Goldman leading it. So Goldman Sachs is leading, JP Morgan are the leading book running managers. But look at this, how it works in Wall Street. But B of A Securities, Barclays, and Citigroup are additional book running managers, known as additional, not junior, not co, additional. Everybody wants their place in the sun. And then this group, here we go, Baird, JMP Securities, the Citizens Companies, LionTree, Oppenheimer Company, Piper Sandler, SoFi, Stifel, Blaylock Van, Drexel Hamilton, Loop Capital Markets, Arcelos, Ramirez and Company, Stern, and Tigris Financial. They will act as co-managers. Now, let me tell you what that looks like. That looks like on the bottom of the prospectus document. It's going to look a lot like this, where the big font up at the top, Goldman Sachs and Company, and then additional book runners, B of A Securities, Barclays, and Citigroup there, and then everybody down there. So basically, everybody goes down a level and the font gets smaller. But nonetheless, this is a large group of people, and this is going to be a very large IPO if it gets out. Now, I think it's going to get out because I think they're all serious this time, but they're having to pre-seed. They've announced that people like Pepsi have already stepped up that said they're going to buy like $146 million or some number of it that Pepsi's already in. Why are they doing that? Because they want to go out with a prospectus and already have some early participants in the bag so that they can show, hey, they think the water's warm. Come on, jump in the pool. Let's go. So that's who's taking it out. And then, so now you ask a couple of questions. This is where I start diving in. Why go public now? Major players all have a play. Amazon has Fresh. They're probably not going to buy Instacart. Walmart has grocery. They're not going to buy Instacart. I mean, you would think not because they already have a play and they're working on it. Google Express, they probably don't need Instacart if they've got that going. And Target bought Shipt. And that's the last one there is a little bit different. But the point is everybody's made a big play in delivery. So now let's take a look at the gig economy, because Instacart is definitely the gig economy, people delivering groceries for you and me for a fee on our groceries. And Airbnb is actually trading above the offering price. So let's take a look at the gig economy, because the gig economy is what they're jumping into the pool on. So how's that done on Wall Street? DoorDash is not above the IPO price. Uber is not above the IPO price. And Lyft is not above the IPO price. And so you take a look at all this and say, okay, Airbnb, and they're kind of not really a gig economy. They're almost like this barter economy in the middle. So the argument being that these gig economy, delivery economies, nobody has blown through the roof and gone to the moon over time like Microsoft did. You know, just like a locomotive, go, 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 just keeps going up. Hasn't happened. So it may be that they need to do the IPO now where they think they have a window with some statistics so they could go out and get early investors monetized and then see if honestly they can make a play of this long term. Well, let's see what the numbers say. Here's revenue and net income. Very interesting. So 2020, you know, $1.477 billion. Now that is their revenue. In other words, what they make on ads and fees delivering groceries. There's two revenue streams at Instacart: advertising and fees for delivering groceries. Then 2021, 1.834 billion. 2022, 2.551 billion. And then the first half, and I have this in a white box over here for a reason. The first half through June of this year, they're at 1.475. Well, you multiply that times 2, and that's 2.950. So that's definitely up over last year. Now take a look at this. Down there, the orange is the net income pre-tax, and the yellow is the net income with tax effect. As you can see, there is no real mark made on 20 and 21. But in 20 and 22, there was like a $460 million tax adjustment positive in their direction that allowed them to go out and say, oh, look at this, our net income was this. It's like, wait a minute. You know, I dove into that. What the net income is really is from here to here. That's what it is, at $71 million. And then this year, it is much more promising. This 306 honestly compares here from operations, and then the 242 is after taxes. That's what you see with a healthy company. They have their net income before taxes and then the tax effect. So what they're doing is they're talking about 1.41825 billion, and we'll be at $600 million pre-tax. That's the story they're selling and saying, hey, that's why we think that we can get out and keep going. We've turned the corner. Well, how have they turned the corner? Let's go take a look, right? This is gross transaction value in billions. Would you like to see how people ordered groceries during COVID? They were at $5.1 billion of gross transaction volume. That's the total value of the grocery orders that they delivered. 5.1 billion 19, $20 billion in 2020. It was huge. What were we doing? We were using Instacart to deliver from our grocery store because they didn't want to go there because number one, you had to wear a mask. Number two, they only had so many people in at once. Number three, you know, a lot of us were worried, I don't want to expose myself to COVID. Then 21, it was 24, and then 22, $28 billion. So the other thing that they're selling in the IPO is, hey, we got a jump thanks to COVID, but then people kept using Instacart. They kept going with it. Interesting, isn't that? So what do I think's up? Here's what I think up. Instacart in the S1 that I read, because I was particularly bored, they say they get $7 per order in customer service fee, but they get $3 per order in advertising. So advertising is 30% of the revenue that they were showing. And they also showed that the grocery growth has been flat for the trailing 12 months. And if the grocery growth is flat for the trailing 12 months, then that means that the real growth is coming from the ad dollars. And so if the growth is coming from the ad dollars, you don't want that. You know, you want to be able to say that the underlying growth in delivery is what's growing. Because if the ad dollars slip and the underlying business is not doing well, you have a flag there. So that's a flag headwinds. And a lot of people, including me, are looking at this in the S1 going, wow, what's that all about? In other words, they're going to go on a road show and Fiji is going to have to go explain that to everybody. And check this out. I dove into it and I looked at the marketing line. I was kind of shocked. The customer acquisition cost, marketing, is $625 million a year, which is about 25% of revenue. And again, if I'm interpreting what they're showing in their S1, that's what the situation is. If it's different, then someone needs to take those many, many words of the S1 and make things a little bit more clear. It appears to me that it's up from 20% in 21 and 10% in 2020. And then the first half of this year that I showed you, that it's still 21, 22%, something in that range, which means, you know, that this is still, you know, a definite headwind. So I believe there's some headwinds here. This is what the roadshow is all about. They're going to have to go out and explain all this to the satisfaction of people. Meanwhile, they got, hey man, Pepsi just bought a chunk. They're already in for this. It's going to be a great IPO. And they've got a huge number of bankers book runners, co-runners, additional runners, runners that are out there pushing this thing. And so that is my quick look at Instacart. Now, if you want to go back and look at the dawn of Instacart and the first chapter of it, in the comments, we're going to put a link to the Biz Doc original case study that I did on Instacart about 4 years ago. So take a little bit about to digest about the launch, how they raise money, how much they raise. And I put it all together in that case study. Meanwhile, we're all going to wait and see what happens to Instacart as they go on the road show and explain the answers to the questions that I've been asking.